Good morning. This is Bloomberg Daybreak Europe. I'm Giovanna Bersecci in Dubai, and these are the stories that set your agenda. A bitter pill for drug makers. President Trump warns pharmaceutical tariffs are likely by the end of this month, but Indonesia gets a deal, agreeing to buy more American exports in return for a 19% tariff rate. Traders trim bets on U.S. rate cuts after inflation data shows early signs of tariff costs feeding through to consumers. Plus, European earnings in focus. Will bring you the numbers and the analysis from chip-making machine giant ASML. Well, earnings season has kicked off both in the U.S. and in Europe, and we're just getting some breaking news out of ASML. And here you are getting numbers that are slightly higher than expectations on gross margin. So the second quarter gross margin came in at 53.7% versus estimates of 51.9%. The bookings number, which perhaps is the major focus for investors, has come in at 5.54 billion versus an estimate of 4.8 billion. So big beat on bookings. They've said that they've seen a total net sales increase of around 15% relative to 2024. The guidance for the rest of the year on that gross margin for it to come in at around 52% versus where it came in for the second quarter at 53.7%. As for the third quarter net sales, that has come in at 7.4 billion to 7.9 billion. The estimate was 8.2 billion. That is in terms of how they see net sales panning out in the third quarter. But the takeaway here, very strong on the second quarter bookings, a big beat versus market estimates. All right, well, that was ASML. And of course, one of the major stories yesterday was the fact that NVIDIA also regained access to sell its chips back into China. That gave a boost to the NASDAQ. And you can see this morning we are seeing a bit of a pullback for Wall Street. And it seems stocks other than the tech sector have underperformed yesterday in trade. The market's still digesting the CPI data that came through. A little bit of a downside surprise on core, though some signals that inflation is beginning to pop up on consumer goods. You can see European markets, though, leaning towards the green this morning. Flipping over, keeping a close eye still on what's been happening in yields. Long-term yields continue to trade upwards. You can see 10-year yields now sitting at 4.47%, 30-year yields sitting at 5%. So the trend has been higher and higher, not just for U.S. yields, but yields around the world. Euro as well trading slightly firmer versus the USD this morning. All eyes on the French budget proposal. We'll be talking more about that later on the show. The pound also slightly firmer versus the USD as we will be digesting the Mansion House speech that the Chancellor gave last night, some of the big announcements that came through there. And then gold seeing a bit of an uptick this morning, up 0.4% as we talk about money going into safe havens. President Donald Trump says he's likely to impose tariffs on pharmaceuticals as soon as the end of the month, with semiconductors also in the firing line.
Pharmaceuticals will be tariffed probably at the end of the month, and we're going to start off with a low tariff and give the pharmaceutical companies a year or so to build, and then we're going to make it a very high tariff.
For more, let's bring in senior editor Bill Ferries. Let's just start with those comments out of President Trump suggesting that tariffs could be coming for both pharmaceuticals and potentially for chip makers as well, Bill. What more do we know?
Yeah, so the timeline is really new here in that Trump is saying that perhaps August 1st, along with tariffs on a lot of other countries, that he sees potential tariffs beginning on pharmaceuticals and semiconductors. He is talking about, particularly with pharmaceuticals, starting at a lower rate. But in recent days, he's floated having that rate rise over the course of a year or perhaps 18 months to as high as 200%. So his goal here really is to try to get some of these big companies, many of them in Europe, to relocate their production and facilities into the U.S. It's really not clear that they could or would do that on that time scale. So it's going to be a bit of a game of chicken here in terms of whether the price increases for drugs that a lot of Americans depend on will go up that quickly over the next starting just a couple weeks from now. And the same with chips. We know TSMC has been building some big facilities out in Arizona. But when it comes to really the most high-tech chips that a lot of American industry needs, those are just simply not built in the United States. So it would be a huge gamble if he really goes forward with this by the president to try to get more of that manufacturing done in the U.S.
Yeah, especially as the semiconductor space has been doing so well in the last couple of months. Maybe that's also giving him justification to go down a little bit harder. But on the flip side, we also heard of a new deal announced, a trade deal with Indonesia. What are the terms of the deal, Bill?
Yeah, so Indonesia would be kind of the fourth framework or agreement that we know about so far following Vietnam, the UK, and China. The deal with Indonesia seems to be, and we're still waiting for more details, that they would face a 19% tariff on goods exported to the United States. That is actually down from the 32% or so tariff announced originally in April on that Liberation Day announcement. So that, in a sense, is good news from Indonesia. The bad news is 19% is still considerably higher than anything they paid before the Trump administration took office in January. So there's still going to be an impact on Indonesia's goods. In return, the U.S. says that Indonesia has agreed to buy about $19 billion worth of energy, agriculture, and there was a reference to as many as 50 Boeing jets. Now, Indonesia already had a previous stalled agreement to buy about 49 Boeing 737 MAXs. President Trump talking about 777 planes here. So it's not clear if they are refreshing that older deal, if Indonesia is making a new commitment or what. But it would be Indonesia would be able to say it's the fourth country, and it was able to negotiate down from those April 2nd Liberation Day tariffs, just maybe not as far down as they perhaps wanted.
Yeah, as you pointed out earlier, closer to 20% than 10%. So for other countries, maybe worth taking note. Senior editor Bill Ferries, thank you so much. Well, underlying U.S. inflation rose by less than expected for a fifth month in June, even as the details signaled companies are beginning to more meaningfully pass some tariff-related costs to consumers. Let's bring in Bloomberg's Valerie Teitel. Val, yesterday's number interesting because we did seem to get a small miss on the core CPI print, but actually many analysts are beginning to point out that you are beginning to see some signs of the tariffs being passed through onto consumers.
Yeah, and that's really what the market reacted to, Jumana. We did see yields higher by the end of the session, so they did not focus on the fact that we've had now 5 straight months of softer than expected core CPI. Instead, they focused on the fact that we are now seeing evidence of a broad rise of inflation across the core goods basket. There was a few components that the market picked up on, one of them being apparel, furniture, even toy prices, Jumana, saw the highest increase month on month in over 4 years. And some of the core goods components saw the largest price increases in the history of the series. That was the window and floor coverings component. I know it's a bit niche, but we did see a broad rise across the core goods component, showing that the first evidence of this tariff pass-through into CPI is beginning to show up. There was some good news, though, in the fact that services disinflation is still on track, and that did keep the headline number in check. But the market didn't seem to care about that, instead focusing on the tariff pass-through. We did see 2-year yields rise around 5 basis points. The 30-year yield breached 5% in yesterday's session. The dollar strengthened off the back of that as well. The Fed cut bets for September have now been pulled back. We're hovering around a 50% chance now of that Fed cut in September.
Yeah, so perhaps the takeaway for investors is Fed on hold a little bit longer. Meanwhile, Bloomberg understands that one of President Trump's longest-serving economic aides, Kevin Hassett, is the early frontrunner to replace Jerome Powell as Fed chair. It comes after Treasury Secretary Scott Bessent told us that the search for Powell's replacement is officially underway.
Well, look, there's a formal process that's already starting. There are a lot of great candidates. And we'll see how rapidly it progresses. It's President Trump's decision, and it will move at his speed.
So, Val, Kevin Hassett appears to be the front runner right now. Is it fair to then also assume that he will likely be more dovish and more inclined to cut interest rates than the current Fed Chair, Jerome Powell?
Well, look, we know that the Trump administration, the president himself, does want a Fed chair who will slash interest rates. And with Kevin Hassett being one of the top economic aides, one of the big proponents and supporters of Trump's economic agenda, he's setting up to be a candidate that could do just that. He's currently the director of the National Economic Council, but he has worked with Trump for over a decade. Jumana, he has deep ties within the conservative economic circles, and he's very effective at speaking to the media. We know that's something that President Trump does like to see in his picks. He has been a supporter of Fed independence and in some way is critical of the current Fed leadership for being partisan and the reason why they're not cutting interest rates with the background of inflation dropping. But that's something the market is going to be having a very close eye on. How can someone so close to the president be claiming he is independent if he does take this chair seat in May? There was some also interesting comments from Scott Bessent yesterday. He was adamant that Powell does step down from his governor seat that he would take once he steps down as Fed chair in May. This governor seat is one that's open until January 2028, with Bessent saying it would be very confusing for the market to have the former Fed chair still sitting on a governor seat. If he does step down as that governor seat, Jumana, that would just be another seat that Trump could fill in order to have some sort of influence on Federal Reserve thinking.
Yeah, a really important point there, especially in terms of what happens to the Fed chair himself after his term ends. Valerie Teitel, thank you so much, as ever. Now, ASML has just reported earnings. Let's dig into the numbers further with Masahiro Wakasugi from Bloomberg Intelligence. We broke some of the top takeaways at the top of the show, namely that the second quarter bookings have come in higher than expectations. How are you reading these results?
Yes, good afternoon, and yes, good morning. And yes, if we look at its order bookings number in Q2, it's about 5.5 billion euros. So it should be slightly better than expected. So I think that the market may be a bit relieved and to see the number. And in Q1, the number was 3.9 billion euro. And if we have to look the numbers in detail, but its order booking in Q2 should be pretty similar number to the revenue level. So probably book-to-bill ratio should be around 1.0. So that's a quite maybe relieving number. And but if we look at the Q3 revenue numbers, probably the market consensus seems to be maybe aiming at around 8 billion euro. And now ASML is guiding around in the midpoint 7.65 billion euros, so slightly lower than the kind of consensus level, but still the company could achieve growth in 2025. Saying 25 growth should be possible, so overall numbers should be fine, I guess.
Is there anything you're going to be watching out for in the coming analyst call? Some of the key topics, perhaps around tariffs or China. What are you watching out for?
Yes, the most important point should be the maybe its a growth outlook in 2026 or 2027, and the company is now saying that the new the most advanced high-end EUV equipment, they ship the first one in Q2. So probably if they can keep the growth momentum for the high-end EUV tools going forward, that should be the maybe we can say that the growth scenario is intact for ASML. And also, as you say, that ASML's revenue in China could be another focus, and they have some restrictions to export to China, and we have to see the numbers in Q2 for the China revenue. But going forward, whether they see still solid demand from China or not should be a very important part.
Yeah, most definitely. Masahiro Wakasugi, we appreciate your coverage from Bloomberg Intelligence. And terminal users can get lots more analysis and commentary on the ASML results from our expert team That is at T-Live Go. Well, up ahead, more inflation data to look forward to. It's not just yesterday. We're going to get the UK CPI at 7 a.m. UK time, so keep an eye out there, as so far inflation has held up, being on a bit of a sticky side, which is probably not what the Bank of England would like to see, but big numbers coming up at 7 a.m., so in about 45 minutes' time. And then later on in the day, at 1:30 p.m. UK time, we get US PPI inflation data, so that is wholesale inflation. Again, interesting to see whether we are beginning to see signs of tariff hitting wholesale demand there and inflation and prices, so watch out for that. And then, of course, earnings season continues. We have more U.S. bank earnings coming up today, the likes of Goldman, Bank of America, and Morgan Stanley as well. Now, coming up, major Wall Street banks set trading records in the second quarter. More on what's behind the surge next. Plus, later in the show, I'll be joined by Pascal Lamy, the former WTO Director General and former EU Trade Commissioner. Stay with us for his take on the U.S. trade war. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Second quarter earnings releases are pushing Wall Street bank stocks in divergent directions, with another batch of the biggest lenders set to report this morning. Charlie Wells is here with the latest. Well, judging by the price action yesterday with the three stocks that reported, JP Morgan, Citi, and Wells Fargo, it could be anything in terms of how we're setting the stage for today's results, because the only one that ended up in the green was Citi, Wells Fargo obviously ending deeply negative. So what are some of the key takeaways that you got from the big three that reported yesterday?
Jumana, it was a striking day yesterday, and really there have been a lot of questions about the direction of travel for this bank stock rally that we've been seeing in this summer of 2025, and we got more clarity yesterday. So really interesting answers coming from the likes of, say, Wells Fargo, really ending about 6% down yesterday. There had been a lot of optimism about Wells Fargo, given that this was the first quarter that the bank was going to be able to report results after that Fed-mandated asset cap had been lifted. That had been in place since 2018, so investors really had been excited, but management yesterday had to tamp expectations somewhat, basically saying that the removal of that cap was not equivalent to, say, flipping on a light switch. They also had to report that their full-year net interest income would be lower than expected, so investors did not like what they saw on that front. It was a different story at Citigroup, where we really saw a boost for that share price really hitting their highest level since 2008, the height of the financial crisis. A lot of this was connected to that $4 billion in share buybacks the bank was able to announce for this quarter.
Yeah, and strong trading results as well. I will say one thing that caught my eye out of JP Morgan yesterday was surprisingly good results in investment banking. How is that going to read across to Morgan Stanley and Goldman Sachs, who are reporting today?
Well, Giovanna, that surprise beat adds pressure to these banks. It adds pressure to Goldman, adds pressure to Morgan Stanley, because there had been a lot of, negativity surrounding deal making in the prior quarter, given the uncertainty that we'd seen, and that 23% beat relative to expectations for JP Morgan does add pressure here, because these banks, because Goldman, because Morgan Stanley rely more on deal making. There are expectations that they'll see growth there, but again, this just adds to the pressure there. Also, we're expecting to see from these banks greater earnings coming from equities trading. In particular, Goldman Sachs really is expected to show leadership on that front. And another bank that we're going to get results from today, Bank of America, that is going to be an interesting one. It's been relatively unloved by the market relative to the peers. Its business mix is a little bit more similar to, say, the Wells Fargos or the Citigroups out there. Analyst recommendations are actually pretty strong for this bank, but we'll get some interesting tells later today.
The commercial banks are always, or at least the banks with a big commercial arm, are always interesting to listen to, because they tend to give commentary around the state of the consumer, the state of the economy. Did we learn anything from yesterday from either Citi or Wells Fargo?
Joanna, we got a really striking shift in tone from a lot of these executives. I think if you look at some of the comments, particularly coming from Jane Fraser at Citigroup, she talked about, the exuberance of the American economy, about how it is really beating expectations here. That was similar to some commentary that we also got from Jamie Dimon, who was talking about how now that we have more clarity on this tax reform, that really does add to the economic outlook of the United States. So this is a shift in tone from the prior quarter when there was a lot of negativity around the uncertainty that we're seeing. So a real change here, a lot of optimism on the direction of travel for the U.S. economy and the U.S. consumer, at least so far.
Yeah, despite all of the macro uncertainty that panned out in the second quarter. It's interesting to know. Charlie Wells, thank you so much. And coming up, the NVIDIA CEO Jensen Huang praises China's AI as world-class. More on that next. This is Bloomberg. The NVIDIA CEO Jensen Huang is in China after the Trump administration U-turned on its policy restricting AI chip exports to China. He's been speaking at the China Supply Chain Expo.
Models like DeepSeek, Alibaba, Tencent, Minimax, and Baidu ErnieBot are world-class, developed here and shared openly, have spurred AI developments worldwide. China's open source AI is a catalyst for global progress, giving every country and industry a chance to join the AI revolution.
Let's bring in Edwin Chan, Bloomberg's managing editor for Asia Tech. So, big story yesterday. What more do we know about what went on behind the scenes before this U-turn by the U.S.?
I think it's important to realize that this comes after months of pretty intense public and, we think, private lobbying on both Jensen's behalf, on both from Jensen and from his company. I think Jensen, especially this year, has been especially vocal about how he detests U.S. chip sanctions and how they are essentially hamstringing his company whilst handing Chinese companies an advantage. And it seems, at least on the surface, that he's won an important victory in getting Trump administration officials to, shall we say, rethink their position. But there are also a lot of things we don't know about.
Well, I was going to say, where do we go from here now that he's secured this concession out of the U.S.?
Yes, I think that there's so many big unanswered questions here. U.S. officials have characterized this as part of ongoing negotiations with China. Part of potentially a quid pro quo, tit for tat arrangement. But right now, we don't know how many of these H20 AI chips that the U.S. intends to allow to flow to China. In other words, we don't know how many licenses they intend to grant. And on the other side, we don't know how much demand necessarily there is within China for these H20s, which are several generations behind the best that NVIDIA has to offer. I guess we'll just have to wait and see and find out.
Yeah, so still not a lot of details in terms of what they can export. Edwin Chan, Bloomberg's managing editor for Asia Tech. Thank you so much. And coming up, we speak to Pascal Lamy, the former WTO Director General and former EU Trade Commissioner, for his views about the U.S. trade war and the French budget. That's coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersetchi in Dubai, and these are the stories that set your agenda. A bitter pill for drug makers. President Trump warns pharmaceutical tariffs are likely by the end of this month. But Indonesia gets a deal, agreeing to buy more American exports in return for a 19% tariff rate. Traders trim bets on U.S. rate cuts after inflation data shows early signs of tariff costs feeding through to consumers. Plus, the chips fall into place for ASML. The world's biggest maker of semiconductor machines reports better than expected bookings as the AI boom drives demand. All right, let's get you up to speed on how some of these key markets are trading. Yesterday, the big event being U.S. bank earnings, kicking things off as we were just speaking a short while ago with Charlie Wells. Bit of a mixed bag there. And on the whole, we saw only Citi and the day up in the green. CPI was also in focus. Some signs coming through beneath the surface that tariff prices are beginning, or the tariff impact is beginning to show up on consumer goods prices. So we saw a bit of a pullback for Wall Street yesterday. Today, S&P and the Nasdaq both down about 0.2%. The European markets also down a similar amount. FTSE also pulling back from that 9,000 mark that we reached intraday yesterday. Today, leaning towards a flat open. As for yields, also in focus as well, has been a big driver of the market attention the last few weeks. 10-year yields pushing higher in the U.S. You can see we are getting close to around 4.5%. Once again, 4.47 is where we're at today. 30-year yields also at 5% now, so the highest levels we've been at since June. Euro trading slightly firmer versus the USD, up about 0.1%, so the dollar trades on the back foot. Also versus the pound, 134, just shy of that for the pound. Both of them, of course, strong performers this year. We'll be talking in a little while about Rachel Reeves, the Chancellor's Mansion House speech. And then gold also slightly firmer as well, up 0.5%. But we were talking about it being earnings season, so let me bring you some of the lines out of Richemont that is just crossed right now. So Richemont first quarter sales have come in at 6% versus estimates of 5.3%. And that is assuming a constant FX currency. So what we are getting is a beat there. And in terms of further guidance, waiting to see more that is coming out of the company. But from what we can tell, the initial headline seems to be more positive. Specialist watchmaker sales at constant FX down -7%. However, and the overall Q1 sales number is 5.41 billion versus estimates of 5.44 billion. So small miss coming through on the sales. And on watchmakers, they are seeing a decline of around 7%. Now, the French Prime Minister has outlined plans to cut 2 public holidays along with spending cuts and tax rises to repair the nation's public finances. François Bayrou says the country is addicted to public spending and he tries to tackle the Eurozone's largest deficit. Bloomberg's Julien Pontus is in Paris for us. So just walk us through some of the main takeaways of the budget proposal yesterday. One of the, I'd say, headline-grabbing measures was that they're thinking of scrapping 2 public holidays. I can't imagine that that's going to go down well in France.
No, necessarily. It's really what grabs the attention, but it's, in fact, a very broad and comprehensive plans. There's like a lot of freezing across spending, be it on healthcare, be it on the central state, be it on local authorities. You have some tax increases for high incomes. You have they're going to merge state agencies. It's a very broad plan. Some of it is obviously open to negotiation, like. You know, the unions can negotiate for the 2 bank holidays, for instance, that's 2 days of work, that's 14 hours per year, so why not work, 10 minutes more per week or something like that. You can always find ways of negotiating, but what's clear is like it's 44 billion, it's as he said, France is in danger of mortal danger. Interest payments are going to go up to 100 billion by 2029 if nothing is done. So yeah, it's a broad plan, but it's not. Some critics will say it's not really a big structural overhaul of the French administration of French spending. It's more like cutting, freezing, trimming. It's not a Millet style, Argentinian style, a Fuera style, or what Greece went through. In that sense, it's not that spectacular. But it's something that France needs. But the main question is, with so little political capital, can he even put that through Parliament this fall? And I guess that's why you see very little market reaction, because the question is like, yeah, sure, that looks okay. So I think the markets would like it. The spread between France and Germany went down just 1 beep. The CAC 40 was broadly in line with its peers. But I mean, after these summer holidays, I think that's when the action will actually begin. And markets are focused on US inflations, on tariffs, and so forth. Not really on France at the moment, but that could change, come September, October, I think.
Yeah, well, I was looking at 5-year OAT, so 5-year French yields versus 5-year BTPs this morning. They're actually trading higher, which is a very interesting development to witness over the last few years. Julien Pontus in Paris, thank you so much for the budget breakdown. Well, for more analysis, we can speak to Pascal Lamy from the political think tank, the Jacques Delors Institute, and a former Director General of the World Trade Organization, the WTO. Really good to have you with us, sir. I want to start actually with the French budget and some of the comments that Mr. Bayrou said. He said that the country is addicted to public spending. It's in mortal danger. Has the time come now in France for a serious dose of austerity, and not just trimming around the edges, as our reporter was saying, but chainsaw style, like Milei in Argentina?
I think the diagnosis is right. All economists, or serious economists, will agree that France has not had a balanced budget 1 year during the last 50 years, and that this needs to be taken back to control. So, but France needs to reduce its public spending, the state, the welfare system, local authorities. The problem is how to do that. What the Prime Minister has tabled is a mixed bag of a bit of this and a bit of that and a bit of plus and a bit of minus, a bit of plus on taxes, a bit minus on expenditure. The only question is, and that was rightly said by your previous interlocutor, whether there is the political buy-in to do that in the French Parliament. We'll see. So what really matters is what the next step is in Parliament.
Yeah, well, Bayrou, if you look at his public approval numbers, he's the least popular prime minister during Macron's presidency. And to get these budgets through, as his predecessor Michel Barnier knows, you have to offer concessions to some of the other parties, be it on the right or the socialists, as in the recent example. How long can this cycle of brinkmanship and weak coalitions continue in France? And is that the most serious obstacle, you think, to actual dramatic fiscal overhaul, which is what's necessary right now in the country?
That's correct. That's the good question. Will now the Parliament buy this after many days, hours, and weeks of negotiations? That's the big question. That's for after the summer break, which the French love.
Yeah. The big question is whether the budget can actually go through. Let me broaden it out a little bit. The other major topic we've been discussing is tariffs, with the latest tariff letter being sent to the EU over the weekend, Trump threatening a 30% tariff rate. How do you think the EU should respond to this? Should they go down the route of confrontation or negotiation?
Well, again, I think that's absolutely the right question. In a very blurred context, a lot of uncertainties. I would say that Broadway has invented the soap opera. Mr. Trump has invented the soap trade negotiations. Lots of new episodes, changing, different casts, different proposals every day. This creates a situation of uncertainty, and in my view, the negative impact on the economy, global economy, or US economy, for the moment comes more from this level of uncertainty which freezes a lot of business decisions rather than tariffs. Now, on your question, I think the EU will use both. They want to negotiate, and they have the capacity to do that, and there can be trade-offs on what the US want the EU to do or what the EU wants the US to do, on the one side. On the other side, the EU is a very large market, and there is a package of retaliations to the tune of sort of 70 billion euro, which is ready. Overall, the big question is whether or not this is a negotiation, or whether it is a unilaterally imposed decision by the US president, and this will determine whether or not the EU take the road of compromise, negotiation, or the road of retaliation. Be it understood that so far all these retaliation possibilities have not been coordinated at all. Canada, China did retaliate. If the EU was to retaliate, for the moment, there is nothing like a proper coordination, which obviously would increase the leverage of countries which are targeted by Trump tariffs.
Yeah. Can I draw on your expertise in trade? You were the Director General of the WTO. Are Trump's actions making the WTO redundant in a world of today where there's been a disregard to multilateral institutions and a disregard for international trade frameworks that have been put in place?
I would not go that far. The US is 13% of world imports, and as long as the remaining 87% are not contaminated, this is not a huge overhaul of the global trading system. The WTO can live, at least for some time, and if it reforms probably a bit longer, without the US. After all, 87% of world imports is the place where this should be discussed. And I think what goes in this direction is what we see on markets. The contradiction between what economists say will be the impact of Trump's tariffs and the relative calmness of markets leads to a question whether it won't hurt the economy on the one side, which I don't believe, but I may be wrong, or whether markets anticipate the fact that these huge, massive tariffs, in fact, will not be enforced, and as a consequence, will not harm the economy as much as expected.
Yeah, all very valid questions. Pascal, Lamy, a pleasure having you on the show today from the Jacques Delors Institute. Thank you. And a reminder, the French Finance Minister, Eric Lombard, will be joining the opening trade for an exclusive conversation at 7:15 a.m. London time. That's in about 45 minutes, so you don't want to miss that one. Now, to some of the other stories making news. NATO Secretary General Mark Rutte has warned China, India, and Brazil they could face U.S. sanctions if Russia refuses to negotiate a peace deal with Ukraine. He urged their leaders to pressure Putin to engage in talks. The three countries have continued buying Russian oil and petroleum products in the years following Moscow's invasion of Ukraine. The White House says President Trump was only asking a question and not encouraging further killing when he asked Volodymyr Zelensky whether Ukraine could strike Moscow. A source told Bloomberg that Trump quizzed Zelensky about whether Kyiv could hit the Russian capital in St. Petersburg if given U.S. long-range weapons. The conversation took place a day after Trump said he was very disappointed by a phone call with Putin. And coming up, the UK Chancellor pledges to shake up bank ring-fencing rules. More in her Mansion House speech next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. UK Chancellor of the Exchequer, Rachel Reeves, has pledged to reform the UK's bank ring-fencing rules to help spur economic growth. The rules were brought in after the financial crisis to protect consumers' money.
I have committed to meaningful reform of the UK's ring-fencing regime. recognising that now is the time to go further in tackling inefficiency and boosting growth, while retaining the aspects of the regime that support financial stability and protect consumer deposits.
Let's bring in Bloomberg's Morwana Kaniyam. Well, ultimately, the chancellor is trying to boost growth. We just played some commentary there about making some reforms on the ring fencing rules. But what else did we learn?
Well, I think the overall message was about wanting to stimulate growth and a real sort of commitment to the City of London. And that is largely what we were expecting from her. There was also some interesting details about this IPO task force. The UK has seen, I think, the worst first half of the year for 28 years for the IPO market. And so trying to sort of kickstart that is quite important as well. But overall, I think the message was, as we were expecting, but quite forceful language about sort of slashing regulation that's been holding back the UK economy.
Yeah, well, remains to be seen how the market is going to digest this. But speaking of markets, we get important UK inflation data in just the next couple of minutes. UK inflation has been quite sticky as of late. What are we expecting today?
Well, we are expecting it to stay quite sticky, actually on a yearly basis, coming in the same, still over 3%. So that is higher than the Bank of England would like it to be. I think it will be quite interesting to look at the mix, whether that's coming through from food or whether the services inflation has actually come down a bit. But overall, I think what's going to be key is how the Bank of England reads this. There's been some pressure for them to cut rates a bit faster than they have been. So far, they haven't really signalled that that's going to be the case. I think if inflation is still coming in at these higher levels, then it's difficult for them to justify that. But of course, they do also, hear the message that we need some growth. And so I think it's going to be tricky, though, because to sort of protect consumers, real earnings is difficult when you've got inflation still coming in well over 3% and not showing any signs of really going down, in the short term. Although the monthly reading will be interesting to see where things are turning from that perspective too.
Yeah, more inflation data to watch out for. Bloomberg's Morwana Kaniyam, thank you so much. Now, the executive chair of Santander has told Bloomberg she disagrees with JP Morgan's Jamie Dimon, who says Europe is losing competitiveness. Speaking at an event in Ireland last week, Dimon said Europe had gone from 90% of US GDP to 65% over 10 or 15 years, adding, "You're losing." Speaking exclusively to Bloomberg's Sonali Basak, Anna Botin says she sees only upside in Europe.
Most of the time, I agree with Jamie. He's done a great job. But in this case, I don't agree. And I think in Europe, the opportunity is huge, and there's only upside right now. Europe has strong fundamentals. Debt to GDP is better, strong institutions. So strong fundamentals. Second, not all of Europe is the same. Same way that Texas is not the same as California or Montana, right? Southern Europe today has higher growth than most of the United States, with very great opportunities to grow. But last and not least, in terms of relative valuation, if you look at banks, we have an ROTE as a return of close to 17%. We're trading at 8 times earnings, whereas the top 3 banks in the United States are trading with similar average returns at 12 to 14. So I think this shows why there is a big opportunity to invest in Europe. And I believe that is something which, it's not just the banking sector, it's in other sectors. Just need to choose your country, your sector, and your company.
Anna Botin, Santander Executive Chair, speaking exclusively with Bloomberg's Sonali Basak. Well, plenty more coming up. This is Bloomberg.
Earnings season is here.
The focus is on the European earnings space.
A busy week of corporate earnings.
We're going to be deeply into a lot of these earnings stories. Bloomberg is first to break the numbers.
Santander, Caixa, Soc Gen,
Deutsche Bank, HSBC, BBVA. A slew of bank earnings already out.
With the smartest insights.
There's an earnings revolution going on.
Markets are going to be driven more by earnings.
It looks like the worst is behind us.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Well, we're going to end the show taking a look at some of the key terminal charts that caught my attention this morning. One of them is to do with Fed pricing and what the market is pricing in for interest rate cuts by the end of this year. We are paring back rate cut expectations. You can see now we're only sitting at around 44 basis points worth of rate cuts. This despite the fact that inflation yesterday came in slightly lower on the core metric. That being said, as we've been discussing on the show, some metrics are beginning to show that the tariff impact is hitting consumer goods inflation. So on the back of that, traders have started to price out their expectations of imminent rate cuts, expectations that the Fed will stay on hold a little bit longer. Switching over, another chart that was also quite interesting, semiconductor stocks. The index is back to the highest level it's been in a year, having fully rebounded from the lows we got to beginning of April on back of optimism once again in tech. And of course, the big news that hit yesterday that NVIDIA have been given the green light to restart and resell those H20 AI accelerator chips back into China. Speaking of NVIDIA, take a look at this. Not only did NVIDIA overtake Apple in terms of market capitalization in May of this year, but now it's got a market cap of more than $1 trillion higher than Apple. So it really is quite prominent if you just look at the price performance over the last couple of weeks by how much NVIDIA has done and how much it is outperforming other U.S. tech stocks. And as we keep an eye on earnings season, of course, we haven't started with the tech stocks yet. Just keep an eye as well on how NVIDIA is driving the Magnificent Seven. So that is one of the key charts that we've been looking at. And Bloomberg Terminal users can access these charts and others used throughout the show on the GTV Go on Bloomberg Terminal. And before we head out, just a reminder, we are having an exclusive interview with the French Finance Minister, Eric Lombard. That is coming up in about 15 minutes' time, and he'll be talking through, of course, the latest French budget proposal that came through yesterday. So a big one coming up in about 15 to 20 minutes, and we will continue to monitor market developments as we head into the European Open. European markets are dipping towards the red. The opening trade is up next. This is Bloomberg.